Well, hello traders and investors, I'm L.A. Little and this is your daily NeoTA wrap. We take a look at these markets and we're doing it from a neoclassical perspective. Each time we're looking at these markets and asking ourselves what happened today and what does it tell us about the coming ones. I do this show 5 times a week, do it on Sunday where we take a look at the weeklies and the monthlies, do it on Monday through Thursday where we're looking at the dailies. It's broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube, and it's under the channel L.A. Little. And if you want to subscribe, you just reach up in the right-hand corner and do so. And one thing I might suggest is, if you haven't looked at what we do, pop over here, hit the Get Started button, scroll over, take a look at what we do. There's a Get Started. It gives you what are the services we have. Most people like the bundle. It's so reasonably priced compared to anything you'll find. Has all of these things involved, all the tools that we do, the neoclassical tools that you can't get anywhere else, as well as the services that I provide in terms of a portfolio, alerts. We do Twitter alerts through a private account, so anytime I make a trade, you get a notification of that trade. And if you haven't been watching that, you can actually see what those trades look like. We do a cradle to grave series on these. And so here in the trading videos, you can watch a few of these to get an idea of what it is I do. I'm teaching you how to trade neoclassically, how to make better trades, trades that have higher probabilities of success based on what the market's telling you. So if you haven't checked this stuff out, you really should take a look at it. As far as what happened today, let's take a look at the quotes here. Today you had another day up. The market's still doing the same thing. Still no give up, folks. Even though we've had a huge run off the bottom, and we'll look at that here in a second. This market keeps climbing. It adds to the push that it had yesterday. The Russell comes back, does its thing. Oil makes the big splash to the top side again today. It was up 4% on the WTI. Gold was up, gives it up, right? Fells at that swing, at that high, which I think in some cases is a swing point high, in others it's not. GDX, GLD, GDXJ, and so forth. The DAX fells again at the Draghi high, and so you got a lot of mixed emotions going on here in terms of the markets. The dollar, big strong move to the downside again. That's pushing all the currencies up. That hurts Europe, should hurt the US by proxy, but today the US purged on up, right? The only one that couldn't was the NDX. That was struggling all day long, closes down slightly. So you got this big mixed picture going on out here, and we're going to start with that mixed picture and the dollar. The dollar breaks the swing point low. We're on a daily time frame here. Breaks it with volume. That thing wants to go lower. If you pull over the weekly, take a look at it. On the weekly time frame, it's going after the swing point lows, and actually it's going after that high volume spike to the downside from last year, August. That's what it's going for. That's what it's going to try to shoot to here before it's over. And of course, that on the flip side is driving every currency that you can find up. If I look at the FXE is up here going after a swing point high, pull it back. That's the swing point high it's going after on the daily. And then there's other highs all lined up here at the higher levels. Folks, if we break on the euro, if we break these swing point highs that are up in this area, and we're not that far away, if you break those, this thing is going to rocket because there's so many stops and there's so many carry trades that are going to have to be unwound if in fact that happens. And we're heading towards that. If you look over at Asia, Asia kind of loves what's going on. It's helping them with the exception of Japan, because Japan's currency is what's killing its market. That market can't lift as this thing goes after the swing point high. So you're pushing there with volume. And again, if you get over these levels, right, if you continue on and you get over these levels, I'll bring the monthly over. Again, huge amounts of carry trades are going to have to be shut down if you start breaking out of this range and you go after these swing point lows. And I suspect that's where we're heading. and that's going to be turmoil, right? Currencies, when they move the rest of the markets out there, whether it's bonds, whether it's equities, all around the world, they move them. The currency markets is the huge market, and this is starting to shape up as another, shall we say, shake and rattle and roll kind of move starting to form. Let's go to the indexes. We'll start here with the S&P 500. Folks, it just keeps continuing. You know, you're going from 1810 to 2036. Hasn't taken a rest all the way up. Basically, it's been pretty much non-stop all the way up, 10+%. The S&P is probably going to hit, let me look back over here. So the price point on this close on the 31st was 2043. We are within 3 points of coming all the way back after a 10 plus, or actually about 11% drop. So once again, straight up V-shaped reversal. I've seen so many of these that it's almost like a nightmarish scenario anymore for a trader watching these V-shaped reversals take place. But this one, still no sign of a failure anywhere. If we pull it over to the weekly, there was a question today and by the members asking, you know, what would it take for a failure of a retest regen? A retest regenerate, you know, when you break to the downside, and I'll just kind of go over this for you that are not familiar. When you break to the downside, you see the trend change there with the green arrow, so you get a bullish, a confirmed bearish breakdown. You broke a swing point low, that gave you the confirmed move to the downside. Now, when you finally come back and you test this low, a bearish retest attempt to regenerate is premised on the fact that that bar that you broke down, the high of that bar becomes resistance. Well, you can see, unless we have a huge reversal tomorrow and we go spiking back down to the back, that has failed to regenerate to the downside. And so you simply go looking for other things of significance. Another bearish retest regenerate is up here. That one you would have to, you know, break down. You would have to break it down. That's at 2072.40. So in other words, you would have to get over that to break that one. Now, many times the way it lines up is your swing point highs, and I'll clean this up a little bit and come back just to this one. The swing point highs that you have out there line up with the highs of the lows. Many times this is what takes place. And so this target is the target area. To get to it, you've got to get over other things. In particular, you have to get over the breakdown bar. This was the bar that broke it all down, right? So that becomes a natural place for sellers to either sell, whether they're putting new positions on short or whether they're trying to get out of positions they're stuck in. If you bought anywhere in this time frame, anywhere in here, anywhere in there, you've been underwater, and underwater pretty deep for a decent amount of time. So as price comes back to those areas, there's a natural inclination for folks to sell and quote unquote get out for even. And so as you're coming back up, this little gap area right here, that's where the resistance is. You touched into it today. You're going to spike into it again tomorrow probably. You got quadruple witching. You're going to have big volume probably tomorrow. This is going to be the area. If you get over this and you stay over this, right, then you're going for the top of that low and that swing point high. And so that's the way this thing shapes up. And that's what I was wanting to share with you and with the members that are watching this show as well. So that is the scenario here on the longer term time frame on the S&P 500. If we move over to the NASDAQ still no failure either. Coming into a swing point high now, 47.88, closes tonight at 47.74. That's the next shot that it has, right, in terms of what can stop it. And then if you look at it here, it's into the swing point low, doing its bearish retest, regenerate. NDX has been the weakest. NDX could not lift today. A little bit more volume, still is an inside day, doesn't tell you much of anything. The NDX can do whatever it wants tomorrow. Look at the Russell. The Russell now. Russell has been probably the best tell for a long time. The Russell has a little range. this tight little range in between, the lows, which is about 1067 it looks like, and the high, which is around 1094. That range consolidation now 2 weeks after a good strong move to the top side without any break, right? That consolidation now is trying to find out, are we going to break down or are we going to do the continuation to the upside? And so right now the question is which will it be? You push decent volume today. You're coming into this bar, a little bit less volume so far, but it doesn't matter until you do the test. That test probably comes tomorrow on that quad witching. The top there, 1094.50, you got today to 1090. Oh, you got over it today, actually. I missed this. I must have got it right at the end because I didn't see it. So this actually tested today. So you actually have a test failure at the highs today. This is kind of a big deal, something I didn't pick up on in the pre-warm-up, so to speak. So you test over it, you have less volume, and you fail to get over it. You probably, given the volumes weren't that far apart, and given that the rest of the indexes, in particular the S&P 500, hasn't shown any failure, probably going to try to test it again tomorrow. If you fail again tomorrow, you're going to fail on this time frame. That's going to be a bigger deal, and you'll have an over-under tomorrow if it happens here. Now realize here you actually have a bearish retest regen going as well. So in other words, you push back into it after more than 6 bars, right, which says you shouldn't get that deep into the bar. We've seen that hasn't mattered. For example, when we looked at the S&P 500, it just went straight on up. But the Russell's going to be a good tell tomorrow. We'll see if the Russell can push higher or not. Finally, if we take a look at overseas, I've talked about the DAX and the fact that it failed again. So today, this is the Draghi bar. This bar has significance because it's a high volume, wide price spread bar. That's why we're watching that bar, because that bar will give you information. You've tested into it 3 times. You've failed every time with lighter volume on all of them. Today you hit it with more volume, but still quite a bit less. That still is a failure on the Draghi bar, and if that holds, this thing's going to push back down and come to the other side and try to test the backside of that bar. Tomorrow, big day in Germany on the DAX to see what it does. DAX has gotten over its bearish retest regen, so that was this area here. Came back within 6 bars, so it should have tested the top. It did, got over it. If you get a deep down day tomorrow on the European market on the DAX, that would be some sort of a signal that maybe that breakout or the break over that high of the low may not stick. And you usually want another bar confirmation. That bar would be this week if it can get it. Now, if I look at the CAX got hit pretty hard as well. The CAX is well within that Draghi bar. Never tested the top. It's going to test the bottom before everybody else does. It pushed down today. Volume expanding, not as much, but pretty decent. That's gonna be the kind of the litmus test when it gets down there and test that. And that could be as soon as tomorrow as well. Finally, if I go somewhere else, Switzerland. Switzerland cannot get off the map. We've talked about this several times now. They don't have the benefit of being able to devalue, or they're unwilling, shall we say, to devalue their currency. They've been coming back, doing a bearish retest regen. They've gone sideways many bars. Finally, today starts to break it back down to the other side. If they hold down here tomorrow or push lower, the swing point low becomes the target, and it's actually the congruent area in between those two, which is very small, but it's down in that zone. 76.25 for my friends over in Switzerland. If we look at the Nikkei, right, I've been saying that Asia loves it, but the Nikkei doesn't. Nikkei can't get going now. It's holding up pretty well so far, but as that currency keeps moving against it, that's going to pull that index back down. Question is will that kind of action affect our markets or not? And so far, we keep ignoring everything. Finally, the Hang Seng pushes up again, but it's doing a big bearish retest off of this swing point low. So a bearish retest regen after more than 6 bars. I don't know that it's going to be able to get higher. It's certainly pushing higher. We'll see if it can actually get up there and stay. And finally, what's keeping the markets afloat here? It's the continued rotation into everything commodity, and that includes oil. As oil comes off the bottom here, you know, this push up in oil has been as relentless as what you see, you know, in the markets. Now, it doesn't look like it. I'm on a weekly here. It doesn't look like, you know, and I'm on the USO instead of the WTI, but it still has. I mean, just take a percentage here. You know, you go in this case 767 up to 1060. So you're up 3 on 767. We're talking about almost 40 plus percent. That's the kind of move this has already done. Of course, it's had a huge drop, but you've had a huge move to the upside. If we pull this back to the daily, right, this contract now breaking out today, pushing up. This is what supported the Russell. This also is supporting all the other things. You know, it's a complement of all the other things going on. As I've talked about before, last night we talked about the XLB, the XLE. Again, that whole swath is being supported. And then today, finally, was a follow-through day on the Yellen dovish talk, both the press conference and the statement. Today did follow through on that and gave us some indication that this market, as usual, loves a dovish Fed, and the Fed itself and the central bankers around the world, of course, they're there to facilitate these markets to rise. So when you're fighting those instruments, you're fighting those institutions, it's a very tough battle. I'm going to leave it at that tonight. Tomorrow's quad witching. We're going to probably see a lot of volatility, or at least we're going to see a lot of volume come in. A lot of times you'll see whatever's done tomorrow unwound on Monday. So, don't get too comfortable with whatever takes place tomorrow. And, this market's going to pull back at some point. But right now, we don't see any failures except that big failure we noticed together there on the Russell. That will be a key one to watch, along with what happens in Europe. Have a great night. Take care, and I'll see you next time. Good night.